Hey, what's up, my New Standard Nation? It's TJ coming at you with another episode with Strategic Real Estate Experts. And today we're talking about how does my credit score affect my ability to qualify for a mortgage? So I know we've talked about this a little bit before, but I want to actually give you an example today, like a real life example. But really, when you look at your credit score, it's used to determine or help determine an interest rate on your loan. So obviously the higher we can get your score, even if you can, like when we have people come in, they'll go, oh, I'm already pre-approved, and their score is right on the edge of being a little higher to get a better rate. Well, we want to do things to help get that higher rate because that saves, I'm going to show you in a minute, tens of thousands of dollars. So really you have to look at it like the higher my credit score, the lower my rate. Vice versa, the lower my credit score, the higher my rate. Or possibly the more money you'd have to come up with to put down on the mortgage. So really, it all depends on that credit score is a good indicator, it's a good indicator to the lenders based on their scoring systems and how much they'll give you for a loan, on what they will give you, and then what rate they're going to charge you. So if we look at the lenders when they're looking at you, they use the credit score to determine your risk potential. So the less risky you are, the better the rate you're going to get. The more risky you are, the higher the rate they want for that return for that risk they're going to take. So if we look at a mortgage loan of $250,000, and if we look at it at 3.8%, so somebody with a great credit score, and these are hypotheticals, but at 3.8%, they're going to pay roughly $1,177 a month, which equals a total interest amount of $173,000 and some change over the life of that loan. Now let's flip it and say somebody with a little worse credit score and they have a 4.2% rate loan. Same loan, $250,000 loan, they're actually going to have a payment of roughly $1,233 a month, and they're going to pay interest of $194,000 over the life of that loan. So that's $20,000 in extra interest-only payments. Just in interest. $20,000 for that slight little jump in interest rate. So the interest rate that you obtain makes a huge difference, especially when you look over the life of that loan. So the better we can make your credit score today, the more money you're going to save over the long term, or the more home you could potentially qualify for at the same payment. It depends on really what you're comfortable for, which is why we have people come in so we can come up with a game plan. And if you have an 850 credit score already, okay, we don't have to worry about that. But if you're on the edge, like high sixes or mid sevens, and we can bump it a little bit higher, and that gets you a little bit better rate, we should do that because it literally saves you tens of thousands of dollars. So again, we've talked more about credit before, so check out some of our older videos. But if you want to know more about what it takes to actually buy a home, qualify for a loan, and make sure, more importantly, you're getting the right mortgage for you and your family's needs, check out knowbeforeyouBuyrealestate.com. You can always reach out to me directly. I don't care where you are in the country. I love it when people call, and I talked to somebody from Arizona the other day because I know our message is getting out there. So please continue to share. My number again, 608-576-0044. Call or text that. You can email TJ at sreehelp.com. And don't forget to raise your standard, and we'll talk to you soon.